Okay, my friends, so the stock market looks wild, or at least wilder than ever, as essentially all the major indices are trading around critical key points. To me, it looks like the market will trigger its next big move very soon, and I will explain why in a minute. So, in this video, we are going to look at our major indices, the S&P, the NASDAQ, the Dow Jones, and we are going to study the most important key points on each one of them in order to find some clues about what to expect next. My name is Nathan. Welcome to the Finance Hydra channel. So let's start our analysis over here looking at the S&P index. First, is the S&P bullish or bearish? The S&P is in a bull trend. Why? Because it is doing higher highs, higher lows, it is trading above the 21 EMA, the 21 EMA is pointing upwards. Therefore, as long as the S&P index maintains this bullish structure, this pattern over here, the trend will remain bullish. Unless if we see a crystal clear lower high, lower low, then okay, the S&P is going to reverse the trend in the midterm, in the daily chart, and probably it is going to seek lower support levels. Honestly, again, in my humble opinion, if we lose 40.78, the S&P will be in a very delicate and complicated situation. Therefore, 40.78 is the support level that the S&P must not lose at any cost in order to maintain the bullish bias over here. We may see a sharper pullback to the 21 EMA or even to the 40.78, but as long as we stay above this key point, the trend will remain bullish, will remain technically bullish. Right now, we are struggling a lot around the key point at 41.33, this black line over here, which did work as a resistance level in the past on April 4 and again as a support level here on April 14, on April 17 and again on April 19. All right, so right now we are struggling a lot around this key point. Therefore, it all depends on how the S&P is going to react over here. If we actually close above 41.33 again, maybe today, maybe next week, then okay, maybe the bullish bias will just persist and then we're gonna seek the 41.95, the next technical resistance level over here. Otherwise, okay, we're gonna just continue the pullback until we hit the 21 EMA or even possibly the 40.78, which is the last support level before a real bearish reversal structure occurs. Okay, now the NASDAQ index. The NASDAQ index, in my humble opinion, is the easiest index to understand, to read right now at this moment because its key points are extremely clear. Right now, the NASDAQ index is doing a pullback. I'm so sorry, it did a pullback. It already reached the 21 EMA in the daily chart over here. This is our first support level, and similarly, and just like the S&P index has a critical support at 40.78, the critical support level on the NASDAQ index is 12.8K, because if it loses this key point over here, it is going to trigger a very bearish chart pattern. Call it double top chart pattern. In this scenario, the bullish bias will totally reverse. And then tech stocks are going to turn bearish. We are going to see probably many tech stocks are going to crash to lower levels, are going to lose their support levels. And the NASDAQ index, in theory, it is going to retest the 12.5K over here again, this purple line over here. So this is a very critical situation for the NASDAQ index because we are trading between a major support area made by the 21 EMA and the 12.8K, this black line over here, and a major resistance area at 13.2K, this blue line up here, which technically speaking, the NASDAQ index failed in retesting this line by a very few points. Let me see over here. April's 4 high was 13.204. This blue line is at 13.212, which is this gap area over here from August 2022. Therefore, this gap is still open. As crazy as this sounds, This gap is still open, and technically speaking, it is the target of this bullish bias over here, which we see since January this year. Therefore, in my humble, again, this is my humble opinion, I think we're gonna fill this gap. Okay, I think eventually we're going to fill this gap. I just don't know if we're gonna see a sharper pullback before or after we actually fill this gap over here, because a sharper pullback is going to materialize sooner or later. We just gotta keep our eyes open at these key points, and the Dow Jones index is insanely bullish. It is insanely bullish. We nail it in this channel, this cup and handle chart pattern over here. It broke the 32.5K, and right now it is just flying. It broke our technical target at 33.5K over here, and right now it is doing a pullback to this support area over here, made by the red line, which is again 33.5K and the 21 exponential moving average. Any bullish reaction around this yellowish area over here, let me erase this yellow rectangle over here. So any bullish reaction around this double support area should be considered just as an opportunity to buy. If we take a look at the weekly chart, in the weekly chart, we are stabilizing, we are dropping minus 0.33% right now, which is absolutely nothing. We are stabilizing in this area. If the Dow Jones actually loses this dual support area, I see it doing a sharper correction to the 21 MA, meaning we could drop more, 1.74% from here, which is quite a lot considering we are talking about the Dow Jones index. The S&P, in the weekly chart, we also see stabilization. It is dropping 0.21%, which is again absolutely nothing. It is just stabilizing in this area. However, if we actually see a top signal in the weekly chart, if the S&P actually loses its 21 MA, the 4078, well, a sharper pullback to the 21 MA in the weekly chart is totally plausible, meaning we could drop roughly 2.5% from here, which again, it is not, this is a quite big deal considering we are talking about the S&P index, while the NASDAQ index is even wilder, because if it triggers this double top chart pattern, I see it retesting the purple trend line over here at 12.5K, meaning we could drop from here minus 3.7%. If we take a look at the weekly chart, 3.7% is roughly over here. In my humble opinion, the 21 MA is gonna climb a little bit higher, and we could, technically speaking, retest the 21 MA in the weekly chart as well. If the NASDAQ index triggers this double top chart pattern. So tech stocks, in my opinion, tech stocks are in a very critical situation right now. And this is quite plausible to see because, well, the fear index VIX is trading at such low levels, right? It is below 17, right? This is a very low level. Any bounce over here might be enough to make the indices trigger their sharper pullbacks as well. We see yields going up. Yields are trying to engage in a bullish momentum right now, which is quite interesting. While dollar is just being dollar, it is just in a bearish sentiment below the 21 MA over here as well. Therefore, we should pay extra attention on how the indices are going to play right now that they are near their support levels. The NASDAQ index already hit its 21 MA. So we must see a bullish reaction as soon as possible in this area in order for the bullish momentum to resume and to avoid a sharper correction, a bearish scenario. I'm gonna keep you guys updated every single day on this channel, so subscribe if you're not my subscriber yet, and subscribe to my newsletters to get access to exclusive strategies on the S&P, on Tesla, and other stocks as well. Thank you very much for your audience, my dear friends. Stay safe. See you guys next week.